So good afternoon, everyone. I'm happy that I'm doing this panel discussion today with you. It's gonna be exciting because we will talk about the transforming traditional finance and what tools or ways can be done to transform traditional finance. So to start with, because we are already delayed, I will let you please introduce yourself, and then we will go into the questions. Kholoud, please, can you start?
Thank you.
Introducing yourself.
Part of this session and even the event. It's really such a pleasure. I am Alyami. I have a computer science bachelor degree and a master's degree in entrepreneurship, business management. I have an experience for 12 years plus in the, let's say, financial industry. And it's a vary between the operating, let's say, payment operating company, the central bank, and a commercial bank. So I have, let's say, a different angle regarding to the payments industry and the financial industry in general. Thank you.
Thank you, Kholoud. It's a pleasure to welcome you here. Please, Amin, can you introduce yourself?
Sure, I can say confidently I'm probably the oldest person in the conference. Like Kholoud, I have a degree in software engineering, but this was back in 1990. I then went on to do a PhD in artificial intelligence and then went into finance. So I've been in investment management since 97, looking at the stock markets in the Middle East, but I've also kept an interest in technology. So since the fintech revolution, if you like, got started, I've been involved with a number of fintech companies, either on the advisory board and in other capacities. And at the moment, I am CEO of an asset management company, trying to set up this function within a company called Randa in Abu Dhabi.
Thank you, Amin. Souhail, please, would you introduce yourself?
Thank you for the invitation. So I'm Souhail Mssassi. I was working as a security consultant. I had more than 6 years. I helped a lot of banks and a lot of companies to secure their system. And I'm also the director of a Shellbox company. We help startups and companies to integrate the blockchain technology and help them also to secure their decentralized application.
Okay, good to see you here, Souhail. Thank you. I think, Talal, are you in? I think Talal joined.
Yeah, he's in.
Talal, can you hear us?
His mic is not working.
Oh, okay. So,
is he muted or his mic is not working?
No, he's not muted, I think.
Okay.
Okay.
Hello, can you hear me now?
Hello? Yes, Talal, we can hear you.
Hello?
Yes,
Yeah,
Talal,
sorry,
we can hear you.
I was able to dial in, but the connectivity isn't. Yeah.
It's okay. It's okay.
So pleasure
please
to meet you all. My name is Tabbaa.
Yeah. Yes, we can hear you, Talal. Please proceed.
Yeah, sorry, there was a bit of a lag. So my name is Tabbaa. I'm one of the co-founders of MEA. We're a regulated crypto exchange focused on the GCC. And I'm also the co-founder of a development company that builds products on Ethereum called Cbdc. And we're focused on the decentralized finance space. And pleasure to be speaking to you all.
Okay, Talal, you are welcome. Thank you too for being with us today. So let's start the discussion. Basically, let's start with financial institutions or Kholoud, allow me to ask you about the experience that you have regarding the commercial banks and the central bank. I mean, how do you see that traditional finance through financial institutions has been transformed or it's on the way of transforming? I can give you a specific example if we can talk a little bit about central bank digital currency. What's your input about it? Do you think that this is a must for achieving transformation of traditional finance? Is it a must for central banks to consider digital currency issued from central banks, or is it just a trend?
Okay, first of all, I just want to highlight that this is all the, let's say, statement is a personal point of view. I'm not representing any commercial or even central bank. So regarding the CBDC, maybe all of us are hearing, in 1 week you can receive 3 or 4, let's say, news about central banks around the world focusing on the CBDC. So we can start this trend started maybe 2017 with Singapore with the project Open, where they started their let's say first phase, and I think they have 5 phases and they closed the project last year, 2020. So we have, let's say, different projects around the world. It started with maybe 2 or 3 projects, we can list them. But now if you can just Google CBDC, you will find like almost 80%, if it's not 90% of the central bank are focusing on the CBDC. So is it a trend? Yes, it is a trend. So is it something that the banks have, let's say, the intention to invest in? We can see it in the news everywhere. Yes, they're investing in the CBDC. But the question is there any, let's say, bank focusing be a catalyst in this field? Because most of the cases we can read about is proof of concepts and use cases and so on, and we only have one live, let's say, a production experiment, I would say a project. It's the Bahamas sand dollar. This is the only live project we have now, because most of the other projects, even the China, it's on a short scale. It's focusing only on experiment and proof of concept. So it's still a mature, actually, technology, and it's still in its early, let's say, days. But it's worth investigating. It's worth, let's say, searching, experimenting. Everybody is investing in this technology because I think this is about
Kholoud, we can't hear you now. We can't hear you now. Yeah, now it's better. Yeah.
So I was saying it's about, let's say, the benefit of the blockchain, because most of the people realizing the benefit of using a blockchain in transactions, especially for cross-border.
Okay, so you mean that if you're talking about the digital currency issued from the central bank, so do we have to go directly to the blockchain technology? I mean, how do you see it related, or is it not related? Actually, as a digital currency issued from the central bank, I mean, not the blockchain technology that can be integrated in different banking systems. Are they related or not related?
Actually, let's say 99% of the announced CBDC are using blockchain or even DLT, distributed ledger technologies. So yes, it is related. Yes.
Okay, so one of the use cases, let's say, of blockchain technology integration into the banking system is the CBDC. All right, so do you see, just like a summary or your opinion, do you see this is adding value to the finance and the financial economy, let's say, of a country, or it's just something, let's say, an alternative for cash money and for credit cards? Do you see its value more than being an alternative way, or its own an alternative way for cash and credit cards?
Okay, it's a very good question. If we let's say within 2 to 5 years, is this Cbdc going to be an alternative? I don't think so. And again, this is a personal point of view. I don't think so. It will be
Yes.
an alternative because it's not mature. It's still, let's say, new technology. But if we focus on the value that, let's say, not only Cbdc and will bring, we're talking about, let's say, an more generic and holistic view about the blockchain technologies. Is there any, let's say, value that this technology will bring? Definitely, yes. And again, and I always say that it's not about the technology, it's about the problem we are trying to solve. So if we have a problem related to centralization with the trust issue with a lot of stakeholders, definitely this technology will support us a big time in this. And we're talking about, let's say, trade finance, cross-border, and let's say a lot to name.
Okay, so one final question about Cbdc. In your experience, throughout your experience, what do you think there have been the 3 major challenges Cbdc, let's say, or through the process of implementing it? Yes, through the process of I'm repeating it. Can you hear me well?
Yes.
Okay. So I'm saying, there are the 3 major challenges while implementing the Cbdc. The 3 major challenges.
You want me to mention 3 main challenges in implementing Cbdc?
Yes.
I'm talking general, not only Cbdc. The first, let's say, challenge is to find the, let's say, beneficial and suitable use case to implement this technology. Because we always talk about this, not, let's say, the magical solution that will solve everything. You should find a beneficial use case. So to find a use case, this is, let's say, one challenge. We're not using the technology for the sake of the technology itself. Because it's a technology, you can, it's, let's say, it's a back end. Nobody cares what technology you are using. They, let's say, consider only the final outcome. So this is the first challenge. The second challenge, I think it's about the skill set. And I think this is a common challenge with the emerging technology. It's hard to skill set in emerging technology. So it is a bit challenging. And the third is about the needed. You cannot hear me?
You have to, I think you have to get close to the microphone or something, because it's, yeah.
The first 2 were clear, صح?
Yes. Okay. Yeah.
The third thing is about the infrastructure, because this is a valid question. Any, let's say, implementer need to consider. Do I need to build a total new infrastructure, or is it something I need to reconsider again? So maybe this is the main, let's say, challenges for implementing emerging technology.
Yes, we will go back to you, Kholoud, with more questions. I will move to Amin. Amin, also throughout your experience of investment, what do you think are the threats and the challenges for financial service providers such as yourself when we talk about emerging technologies?
Thank you, Randa. I hope everyone can hear me. I want to focus in terms of what's going to be interesting for the consumer. So some things will be a threat to existing service providers, but that's the way of the world. Sometimes things change. At the moment, the biggest threat for service providers is the fact that the new technologies offer us ways for people at a smaller scale to access investments that in the past you had to be large enough. If you're not large enough, you have to go to an intermediary, and you have essentially this whole process of wholesale and retail and smaller investor. And in between, a lot of the margin and the fees got multiplied. So I think the key major driver in all of this is fractionalization, because tokens, can be even on the fly reduced to be smaller and smaller size. You can easily get to the stage where you have an app like even Siri, and you tell them, buy me 50 cents worth of Apple shares, because I don't have to buy a whole share and I don't have to go. Now, you take that across assets as a whole, and a lot of industry players who are sitting in between the big transactions and the small investor start disappearing. You almost don't need the advisors. Currently, there are two, from a regulatory point of view, two sides. Your typical broker, what we would call the sell side, they give you recommendations and they give you access on their platform to execute. And they will be a member of an exchange, and then they will take your order and place it. Now, if you look at digital exchanges, there are no brokers. You go and trade on them. So once there is enough liquidity, that can be taken care of. Now, there are pros and cons, and Talal is in a much better position to discuss them. But my point is, already one intermediary has disappeared on those exchanges right away. Okay. Historically, the broker, the sell side, was there to give you advice, but they made their money when you traded. So their interest was for you to trade a lot for them to make fees. They didn't have a responsibility towards you to make money. This role has shifted to the exchanges. It's in the interest of the exchanges for you to trade as much as possible now. Now, whether that's good for the investor or not is a different discussion. For the other side, from a regulatory point of view, was the fund management, the asset management industry. We had a legal obligation to look after the interests of the client, and our fees were typically trying to be aligned with the client fees. So they make money when we make money. I'm not going to say that has always worked. So as we know in the financial services industry, there are sometimes situations where you wonder if the interest of the client has been taken at heart. But officially, that is the role. So the advice there comes with more responsibility. What replaces that in the new space, I'm not entirely sure. The key is always going to be the killer app, and also what the impact is on the market. So again, going back to an example of something we just mentioned, which is very relevant. Central bank digital currencies, they could just be a replacement for notes and coins. So there, it's about the implementation challenges. But let's say it happens successfully. So all the government does is, whatever it used to issue as notes and coins is now available only on a wallet. And there's no more than that in terms of quantity, okay? That, the interest would be, if that can work and it can function, what's the benefit for the government to do that? It's all the extra applications over cash you can get. So every transaction can be traceable. But there are all sorts of other things cash couldn't allow. So for example, during the crisis, I think it was Larry Summers who was saying it would be nice to have dollars with an expiry date. So you force people to spend them before a certain time. He was saying as a dream, you can do that with a central bank digital currency. You can do it so that if you invest in something the government approves of, it's worth twice, because that way it incentivizes you. So there are other apps that can come, or automatically tax you when the tax bill comes up. So that's the kind of thing. The other side is always unintended consequences. So at the moment if we have a bank account with a central bank, which allows us to have more in our wallet than just what they have in notes and coins, that starts impacting the banks. At the moment, the banks are able to issue loans because we put deposits with them. If everybody is able to deposit as much money as they want with the central bank directly, that threatens the bank's ability to lend. So again, it's always the killer app that will make the difference. And this is where it'd be interesting to see, do you get an intelligent advisor that just simply buys stuff for you in the morning? You don't need the fund managers at all. But certainly the access to smaller investors, not to need intermediaries, is the most immediate impact I see of everything that you trade as an investment, being able to go on a digital exchange and get fractionalized to smaller amounts, and the cost of trading to actually drop.
Thank you for your valuable input. I also will come back to you with more questions. Let's go to Souhail. Basically, Souhail, because you mentioned that you have an experience of integrating a blockchain application, let's say, with the banking industry or the banking systems. So would you please elaborate on this? And what are the main successful modules that you have worked on so far regarding this subject? Of course, with banks.
Okay, thanks, Randa. So it's a very interesting question. First of all, when we talk about blockchain technology, we are going to talk about a lot of concepts, a lot of protocol, a lot of technologies. We should differentiate about from cryptocurrencies and smart contracts. So in each scenario, there is some cases that, or there is some use cases that will help us. So, for example, when we talk about smart contracts, and we did work with a lot of banks to implement their smart contracts, including some logics with their clients. Basically, the thing that we focus on implementing data integrity and also providing a full transparency history. Of course, it depends on how exactly the bank want to implement this logic. There is some banks, or the majority of the banks, want to implement their smart contracts or implementing the blockchain to be executed with a private transactions. But of course, I can mention some use cases that we are working, and we are already worked with banks. So basically, we can talk about some cross transaction, and here in Morocco now, they are thinking about creating their own cryptocurrency. Now they are just studying the state and how also they can integrate the cryptocurrency. Now we have the Central Bank of Morocco, and they are viewing and studying this feasibility about this cryptocurrency. Also, to gain some confidence with banks and their clients. Now we are seeing blockchain can help us to do this, to provide full transparency. Of course, we can talk about providing some authenticity, also providing some compliance and KYC system. Of course, banks now are oriented toward the technology. I can't say that blockchain will negligate banks or remove banks. Of course, banks are now evolving, and the way that banks are making the technology to improve also with new technologies. Also, some things related to finance and also to trading now. We helped some banks to create with the technology blockchain to make some fraud prevention. So by storing the information of the client or the customer on a decentralized blockchain, so it will be very easier. But also, of course, when we talk about a financial transaction, we talk also about security, so a safer way to store this information and to share this information between financial institutions. An important thing here also is to how can we provide security in blockchain. So there is two major or two essential things is that we can talk about security of blockchain, but we can talk also about how can we secure an information system with blockchain. And banks now, they are critical infrastructure, and they need to add a security layer to their system. And now we are viewing that and many needs of banks that they want to make some trade intelligence, or also make that all of the information that is monitoring, that it can be viewed in a transparent way, and help the banks or help also the partners to view this events and this monitoring events in a transparent way. Anyone can access to it. The other things, and it's very important, it's the security here, the security part, of course. When we talk about smart contracts, or when we talk about cryptocurrencies, there is a lot of hacks that happens. I can mention, for example, the Ethereum fork, and it leads to a lot of smart contracts and hackers are draining millions of dollars from this smart contract. So of course, we see a big relationship between security and blockchain, and also financial institutions.
Yes, you are right. Great. Thank you for this valuable input. So also I will go back to you with more questions. Now I would like to ask Talal. Talal, are you still with us? Talal, I think Talal is not here.
No, he's not part of the list.
Unfortunately. He is here?
He disconnected, I believe.
Oh, he got disconnected. Okay. Okay. Unfortunately, we wanted to have Talal's experience about coin MEA, which is the first. It's not the first. Sorry. It's the second licensed exchange, cryptocurrency exchange in Bahrain, and it got the license of the central bank. And I hope Talal can join us again so he can just discuss this phase, the challenges, and what's next. So going back to Kholoud. So you mentioned the importance of Talal. Are you here? Right. Talal, can you hear us? Okay. So Kholoud, I need to hear more from you about the integration in banks, and can tell us more about the DLT, or is there any governmental observation for blockchain application or any emerging technology? Or if you can be specific, the DLT module. I mean, government and the central bank.
Okay, I will talk, let's say, on a domestic level, because I'm aware of, let's say, application here within Saudi. Actually, yes, we have a lot of, let's say, application of DLT and blockchain within Saudi. We have great experience with the custom, where they implement blockchain to track, containers and shipment through the ports. So this is a very good use case for blockchain and DLT. It was a proof of concept. We have other use cases. within Saudi using blockchain and DLT. So I think, yes, we have a lot of, let's say, implementation, but it's worth mentioning that when we talk about DLT, and let's say blockchain in general, there are a lot of implementation, not only in the financial sector. And I think this is very well known, where we can see it in a different, let's say, places. Where you can see IBM, they implemented, I think, 2 use cases, one for the diamond tracking, where they use the blockchain, and the other is for, I think, in Corona, where they tracked all the health records and so on with the, let's say, health cases. So we have a lot of, let's say, implementation within the MENA region. And not only in, let's say, Saudi, we have it all, the GCC, the MENA, there are a lot of, let's say, implementation. And also a lot of, let's say, implementation for the, let's say, central banks. We can see the efforts with GCC and even MENA central banks, where they are starting now to experiment and explore the implementation of blockchain and DLT, and how can they use it in the financial sector.
Yes, so do you think how much this will take time? I mean, if the government is considering this in the customs and even in the healthcare industry, besides the financial body, do you think that this will take like 5 to 10 years or even more?
Let's say the central banks and even, let's say, the banks and financial PSPs, payment providers, they took their time, let's say, before Facebook announcements. And once Facebook announced about Libra back then, this was like a trigger for, let's say, most of institutions to reconsider this, because there are a lot of threats. So since that, this, let's say, was like an, let's say, this expedited the process and became even faster. So if you ask me this question in 2019, I will say this may take like from 5 to 10 years. But after the announcement of Facebook and Libra, now called Diem, I think it's totally different. And we can see the focus, and now everybody is keen to, let's say, learn and know more about this, because now, let's say, the expectation becoming very, let's say, high, and the threat also becoming very high. You cannot control the stable coin, and other, let's say, options are available. So you need to be ahead of this. Otherwise, you will be, let's say, trying to, let's say, catch up and firefighting all the time. So I think this will take like less than 5 years.
That's great hearing this, really. I wish also that the growth will be faster, and people will be, the culture and the people will be more adopting this technology and understanding it more where it fits, let's say. So I'm hearing, I think someone is opening his mic. I don't know. Is this voice coming from me? I don't think so. Anyway, let's go to Amin. Amin, you mentioned probably everything that I wanted to ask you about concerning the risks, and how do you see the investment going if there's a mass adoption, let's say, or a big appetite on tokenization. Just want to ask you 2 things. One of them is, what do you think about, what's your input about the ADGM licensing custodians in Abu Dhabi? Where do you think this is going as a professional person in investment industry? And one more thing, it's not a financial advice, but it's only your input about cryptocurrency, investing in cryptocurrency, and specifically Bitcoin. What's your input on that?
Okay, so let's start with the custody question.
Yeah.
What's preventing at the moment institutional investment houses that take people's money and invest in other assets like shares or even commodities and derivatives is there is an established way in which to keep investors' money safe not just in terms of the price fluctuation, but in terms of employees within the company that's doing the management, double signatory, fraud. There are procedures whereby not a single person can end up. When you're entrusted with running people's money, this industry is regulated for a reason, because it's somewhere where it's possible to have a lot of fraud or issues. So there have been historically controls as to who can double sign on what, when the money can go from one place to the other on the traditional technologies. The regulations are still in place. So one of the concerns people like that would have is, okay, I buy Bitcoin from my clients. In the old traditional way, there is a key. If more than one person shares it and the Bitcoins disappear, who did it? So extra technology had to go into place to allow this kind of trust and authentication to be shifted to a technology which literally, once you have the private key, it's gone and it's not coming back. That's part of the feature of Bitcoin. So when we say now there are 3 licensed custodians in ADGM, that means more institutional investors can come and set up funds or other investment vehicles because the regulations allow them, and then they can collect people's money and invest them in digital assets. The idea is they need the expertise of these financial experts to invest in those digital assets. In the previous question, we discussed that maybe that's on the way to automation, maybe there'll be different types of experts. That's a different discussion. So it's relevant in that it brings more people into 2 things. One is a different way of investing in what may be traditional assets. Because of the way tokens work, it's possible, as I said, to make them smaller and more accessible, which means you lose some intermediaries, but they're giving you a token to something else. It could be property as a physical asset or your shares. They're no longer traded on an exchange with custody, and you see that actually they traded in much smaller quantities as a token rather than quote unquote a share. Because there are features that killer features, like you can vote in AGMs instead of having to write proxies, or just an improvement in the technology of what you can do. Then there is different types of assets that become possible. So like cryptocurrencies, or tokens that are set, that utility tokens, or things like that. That's two separate questions. So the custody at least allows what is existing now as trusted for the time being institutions to be able to offer access to investments like that to ordinary investors who might not be able to go directly, or if they're able to go directly, feel that they don't quite know what to do. Maybe with time there'll be no need for that. Who knows? In terms of Bitcoin or any other asset, by the way, crypto asset or otherwise, it's always very important to try to remember. Because I'm linking this to a question that was asked on the chat, the link between what's the benefit of integration between big data and blockchain. My question, the link isn't obvious, but my question is, what's the benefit to whom? So when you've been in the finance industry this long, you realize, and in commerce and generally, often the interest of one person is not the interest of the other and so on. Sometimes interests are aligned, but the higher somebody can charge you as a fee, the less it's your interest and vice versa. So whenever we're talking about an investment in Bitcoin or anything else, there are 3 types of assets you can invest in. There are real assets, physical assets, which you own, and they're nobody's liability. So the law around you gives you the right to prove ownership, whether by blockchain or other means. Somebody has to enforce that. Then there is financial assets. These are always somebody's liability. If I buy a bond, somebody's lending me, I own a piece of paper, I call it an asset, it's a liability on them. The same is even true of shares, okay? That's classic financial assets. And then there is money. If I hold cash in my hand, that's money. Is it really a liability of the central bank? It's not clear, okay? So this is something interesting about Bitcoin. It's nobody's liability. It's really like gold in the sense that once you own it, it's not physical, but once you own it, nobody can take it away from you short of fraud or anything else. What's it going to be worth? It's as difficult to predict as what's gold going to be worth. It's what people are willing to pay for it. There's very little to go by underlying. When I'm buying a share in a company, I can analyze the business, the company itself, right? It's very hard to do that with Bitcoin. Okay, so the only way I would recommend people to look at it is if they see, because its value is preserved, and they worry that there's too much money being printed, then for the long term, if they keep their money in Bitcoin, it can be seen as a store of wealth. I'm not saying this is a workable thesis. I think it's worked so far, but the only one that I've seen that's convincing is if you believe people will still demand it in future and its supply is limited, then if you want to store your wealth rather than in dollars, because you don't know how many dollars will be printed, for example, then it's a better way to store your wealth. I don't see it easily usable as money. That's a different discussion. So I would say treat it like digital gold, and whatever view you have on that, decide if this is what you want to invest in.
Yes, Amin, thank you so much. I agree with you and on what you said. Yesterday we had discussion. I had a discussion of Bitcoin economics, and we went through the economics of that. And yes, when you have to consider investing in Bitcoin, you have to look at different angles, the economics of it, the finance. And you mentioned something very specific and very right about the supply and the demand thing. So, and there's technical analysis, and it's a concept. It's not following the hype, and the volatility of prices is based on a concept, a protocol. I'm not here to defend Bitcoin because I love it, but it's just adding some value to it. So Souhail, I have one more question. We don't have much time. Souhail, please, can you just give us an overview on the startup scene in Morocco and Tunisia? And is it a growing? Is there a growing pattern for startups doing blockchain applications? And where do you see the gap throughout your experience? Where's the gap? Is it in the market? Is it in educational infrastructure? Please let us know your input.
Okay, so just to give an idea about Morocco and Tunisia in blockchain and also in startups of blockchain. So at Shellbox, we are helping these startups to make a proof of concept, to study more how they will implement the blockchain technology, because of course, and Kholoud has already mentioned it, blockchain now it's a trend, it's a hype, so everyone want to integrate it. But the question here is it mandatory to implement blockchain in your startup, or is it blockchain the solution for the problem that you are tackling? So now in Morocco and Tunisia, we are seeing hackathons in blockchain. Of course, there is a lot of ideas that they want to implement blockchain, not only in financial institutes, but also in I see startups in gaming that uses blockchain solution in security of the blockchain, also some solution in supply management and supply chains with blockchain. So of course there is startups, but in the other hand, there is some problems. So I will talk about Morocco and also Tunisia. So there is some problems. The first problem is regulation. So just in Morocco, to make or to trade with Bitcoins is prohibited. So it's kind of now difficult to talk about cryptocurrencies. Just this year, Morocco is thinking about it. So there is no exactly, or there is no rules talking about the blockchain technology, about cryptocurrencies. So this is some problems. Also, we have now this year in regulation, Morocco just released some regulation about cybersecurity. So I think that 2 years or 3 years, maybe Morocco will put this regulation. Also, is if we talk about education, so of course in Tunisia and Morocco, there is some universities that teach blockchain, but there is a lot of developers that want to migrate to this technology. We can't have the idea, have the startup, but the developers or the architecture that will think about the solution, or the, for example, the crypto tokenomics will think about how the token will be, how much, for example, for the total supply. So here it's a very hard problem to tackle, especially if you are a startup that begins with 2 persons or 3 persons, and they have minor ideas about blockchain. So of course our goal is to help this company to first of all comprehend the problem that they want to tackle, and also how can the blockchain exactly will solve the solution. Second thing is to of course to make an ICO, or also a white paper to explain in details the solution, because now everyone is talking about blockchain, but they forgot a lot about the technical aspects and also the managerial aspects, and how exactly they will convince also the community to interact with the solution. And of course, if we talk about regulation, yes, it's a problem for now, but I think that Morocco and Tunisia are doing great things to implement or to adapt these technologies. We just need some time to comprehend or to adapt the technology of blockchain. But we are hoping that this migration and also the digitalization has been very accelerated also with COVID-19. But we are hoping that with or without COVID-19, hope to that our country will migrate in a fast way to adapt and to make some regulation in the blockchain industry.
Can you hear me?
Yes, yes.
Okay.
To close up. So
Yes, to wrap up, thank you so much for this discussion. It was very exciting. I still have questions for you, but we don't have time. Thank you, Souhail, Amin, Kholoud. Thank you, everybody, and see you later.
thank you.
Bye.
Thank you.
Thank you. Bye.
Thank you.
Thank you so much, everyone.
Bye.
Have a great day.
Bye.